the world for all the banks. And then I moved on to CME Group, which is the Chicago Mercantile Exchange. And I spent my time there working on not only FX and metals products in the futures market, but also looking at cryptocurrency starting about 2012. CME ended up with our team. I architected the Bitcoin futures, and we launched the Bitcoin pricing products at the end of 2017. I've now left to focus on blockchain for social impact. So I'm an entrepreneur as well as an angel investor. I have 2 startups focusing on helping farmers in physical commodities, as well as helping artists create businesses and focus on their creativity. But one of the big passionate projects I have is also around blockchain education around the world. So let me explain what GBBC is, because here today, I'm here representing GBBC as the CEO. The Global Blockchain Business Council was started on Sir Richard Branson's Necker Island during the on Sir Richard Branson's Necker Island during the Blockchain Summit of 2016. A group of people came together and said, blockchain is going to be a global technology that is going to cut across every sector, every industry, and potentially every country. So how do we help with education? So we launched at Davos 2017, the GBBC with 35 representing countries. We are now over 40, probably actually 45, and we are rapidly growing. And what do we focus on? We are a Swiss nonprofit. We're based in Geneva with an office in Washington, D.C., and we have a number of other offices that we'll be launching. We'll be launching GBBC Australia in December, and we have already launched GBBC China. And we focus on education, helping governments, regulators, executives at some of the biggest companies around the world around blockchain as a technology and how it can help and enhance citizens' lives. Because if we do not think about blockchain as a human technology, then what is it for? It has the ability to actually enhance the human condition and create opportunities for young people and help governments to actually deliver better services to their citizens. And this is from where we come, and this is why I travel the world, even though I'm based in New York. My team and I are basically on flights all the time because we're going to small countries, big countries, to help with education. Most of what we do is not public. Most people don't know that we're meeting with government officials or that we're meeting with CEOs of big companies. That's not our purpose. Our purpose is to literally sit with influencers and explain and talk about the technology from the point of view of what are your problems? What are the business problems? What are the community problems that can actually be solved? So one thing I want to note that we just did recently that may be of interest to you because it is important. We just acquired a very large London-based nonprofit called the Post-Trade Distributed Ledger Group. It's called PTDL. And that group is made up of some of the biggest market infrastructure companies in the world. So State Street, HSBC, CLS Bank, Moscow Exchange, London Stock Exchange Group, et cetera, et cetera. That group is now under our vertical, and we're going to focus on helping big institutions share information around what they are doing in their pilot projects. Because for the questions that come about what are banks doing, what are exchanges doing who are regulated already, a lot is actually happening. And you will see more and more of this. And I'm going to talk about a little bit of it today. So, when I think about asset classes, I want to divide it very loosely because the terminology absolutely is confusing. So when I think about cryptocurrencies, I think about the ones that you hear about, which are like Bitcoin, Ether, Litecoin, Zcash, et cetera, et cetera. Those operate on specific blockchains. When I hear digital assets, I think of really what is physical, what exists as a financial instrument that can be tokenized, that can be digital. And that includes real estate, that includes cows, that includes crops, that includes financial instruments and gold, for example. When I think about digitized fiat currency, that really is the domain of the government. This is government issued, government backed actual money as we define it today. And there are already governments who are indicating they're going to do this. Barbados has announced that they will be actually launching a digital Barbudan dollar. The Caribbean region has done remarkable advancements around central bank digital currency. And if people are confused as to what is the difference between electronic money, it already exists today, and digital fiat currency, I explain it this way. If a government were to issue digital wallets to their employees directly, so government employees, you could get paid directly by the central bank of a government. And you could bypass the banking system if the government wanted to do that. Now, practically speaking, most citizens would continue to have bank accounts. But what if governments were to just directly through digital wallets pay to you if you are a government employee? These are topics that have been discussed. Whether they're actually going to happen or not, we shall see. But that's just one example. So blockchain technology, where are we going? Well, I have some good news. There's actually been a lot of building in 2018 and into 19, which is focused on the technology and not so much about the trading aspect of it. And don't get me wrong, I'm a trader by background. I love trading. I think it's great. But what has happened with the reduction of the hype has been a very good thing, which is it is now focusing on those who are serious about how we actually solve real world problems and people who actually have real business plans. Writing a white paper and then launching an ICO is not the way to go. And that's something we should highly discourage. If you have a genuine idea that actually deserves funding, then there should be merit around that. But right now, it's been very messy, and frankly, it's been, as the Americans would put it, Wild West. And so it needs to be curtailed. So like I mentioned, cryptocurrencies were largely ignored until 2017, but then they had a major spike last year and this year in terms of trading, but this year obviously it's come down. Trading is actually very not user-friendly. There's still a lot of building going on with wallets, with back-end infrastructure, and when people ask me what is happening here, I say to them, look, in many ways, the crypto side of the trading market is a new asset class. It is being recreated by Wall Street in many ways, meaning if you think about what is happening here, it's not really all that innovative. The trading side is actually pretty much building out the same infrastructure that you would build out for gold trading or FX trading or stock trading. So in that element, it's actually growing as an asset class. And most likely, as we will see here, I'm giving you examples of big institutions and also small institutions who have basically come out and said they're either launching an exchange or financial products or trying to get an ETF approved, et cetera, et cetera. It's happening. It's something that will continue to proliferate. And frankly, now that household names are involved, I think you will see more growth in 2019 on that crypto side. More products will come, and that includes derivatives. So when I think about ICOs, and they've been mentioned here, I just want to show some numbers. I'm a numbers person, and I like to see where trends are going. These are trends, obviously, from one website. I think the data is still not perfect, so take the numbers with a grain of salt. But it shows you year on year, it's growing. And if you think about what that means, it's a paradigm shift. So as venture capital came in several decades ago as a paradigm shift for how people raise money or entrepreneurs can raise money, it's now mature. Venture capital is a relatively mature industry, and a lot of that money sits in Silicon Valley, London, New York, etc. Well, think about ICOs as the next generation crowdfunding that allows an entrepreneur sitting in regions around the world that are not accessible to easy capital or to capital at all. An entrepreneur in Morocco, an entrepreneur in rural Rwanda, what access to capital do they have if they have a good idea? If this concept is nurtured properly, it could actually offer up any entrepreneur that actually has a really good idea, the opportunity to create business and to do something that was completely inaccessible before. So I think we should think about this in the context of opportunity to create more ability to access capital for people who don't have access to any capital. But of course with guidelines. Now, I will highlight this one because it was the largest one, I believe, in 2018 to date. Telegram raised all their money in a private ICO. And this is something I want to highlight as something that I do not like that's happening in the market. So I don't know how many of you realize, and I will fully disclose, I have participated in token sales before in 2017 of people I actually knew and businesses I actually trusted. But there are concepts called pre-ICO, pre-ICO, ICO. Do you know what happens in a pre-ICO? There's massive discounts for those who are in the know. And these are club deals. These are private, and very few people know about them except for people who trade. Then there's the pre-ICO, which you might get a 25% discount. Okay, not bad. But by the time things get to an ICO, and this is the fundamental issue that I have, is by the time the public market or the crowdfunding actually happens, you've already at a deficit by somewhere between 50 to 70% because people have already gotten in way before you. This to me is something that needs to be looked at and needs to be carefully guardrailed. Because there's nothing wrong with getting investors in a private sector, but there's something quite unfair about 70% discounts to then go public, and then the public market actually buys at the fair market rate. I think we need to challenge that. So I just want to highlight that for the policymakers. And countries that are doing some really innovative work, and I highlight one, there are many, but Switzerland has actually come out with some definitions, which I think already, but I highlighted some token and a utility token and a payment token is actually significant. And I don't think we should gloss over the differences. And I think we need to think about how those differences are treated. Many of the existing securities laws will cover security tokens. Many of the existing laws would not cover how you would treat utility tokens. And frankly, maybe you don't need to actually worry about utility tokens depending on how they are defined in a system. So I think we need to be careful about and mindful about how these definitions are being applied, and I think we also need a global solution around this. So when we think about blockchain consortia, in the last 3 to 4 years, we've had an explosion of nonprofits, consortia, for-profits, a few of them, who are getting together to try to find standards, to get dialogue increased, who are focusing on governments, who are focusing on enterprise. There are many, many different groups. I will tell you, when I was at CME Group, I was one of the founding members of Hyperledger, which is a Linux Foundation initiative, and I was also the treasurer of the EEA, which is the Enterprise Ethereum Alliance. And so I'm very familiar with how many of these came about. And they came about because people saw that there was a need for increased dialogue, the globalness of what this is happening, and frankly, across different sectors. And it continues to proliferate. So I want to talk about the US. US regulation is coming to crypto. There's a representative, his name is Tom Emmer from Minnesota, and we've been speaking to him. He's a Republican from Minnesota who's been proposing 3 bills to Congress around adding certainty to crypto and blockchain and making it more user-friendly for advancement and growth in the US. The US has been very challenged because you have many different regulatory bodies who are, well, 4 different definitions of what is crypto or what is a digital asset. You cannot have 4 different definitions and have it all be true. It's actually quite difficult. So the US is trying to work through that. But here's the reality. This is not a US-led initiative. This is actually a global initiative. And my argument would be, is that actually all countries, and these are just a few that I've highlighted, need to actually get together and lead the way. And because so much of the blockchain tech and crypto advancement is happening in Asia, Japan is already led in many ways with their regulatory stance and their views on Bitcoin. But South Korea, Singapore, A number of other countries need to really, I think, take the lead and come together, and this should be an Asia-led initiative as well as conjunction with European, and I've got, believe it or not, a few small Caribbean islands on there as well. Bermuda, Barbados, they should not be neglected because they're doing quite a lot. Malta as well. And these leading, forward-thinking, pioneering countries should be the ones who get together to really sort of think about what we do next. So as a final sort of few thoughts, I want to talk about blockchain beyond crypto. Because to me, the most exciting parts of what's happening in the next couple of years, and the things that should get people really excited, is about, again, going back to raising the human condition and improving people's lives using tech. It's not tech for tech's sake. It's tech to help people. And when I think about energy sector, when I think about financial services and food and healthcare, and land and real estate, there's so much that blockchain could help. But it's not just blockchain, it's AI, it's mobile, it's so many other things. But blockchain could be underlying plumbing that actually helps drive a lot of this change. So if you want to get excited about more than just crypto, I would say yes, absolutely, there's plenty of room. And we've only just begun. So next steps. This is something I want to say for policymakers. Which is going to be about next steps. It's already happened with GBPC. This is a major step forward, and I'm very grateful to be a part of the first grouping of countries to think about this. But I have a list of countries I would recommend that you think about adding, as well as we really desperately need global standards and oversight. We need to have a dialogue around what do we commonly agree, and when I say we, I mean really the policymakers. There is so much research, white papers, documentation, conferences about blockchain, but here's the problem. Everyone's doing it in a silo, and we need more global collaboration. The communication needs to be stepped up, and the collaborations need to happen from the influencers and the policymakers. So I admonish all of you who have that influencing ability to please increase the dialogue as you're doing now. And lastly, I want to say crypto for regulators can actually be a tool as a friend. It's not the enemy. I would actually argue if you care about money laundering, if you care about terrorism or counterterrorism, if you want to actually increase better KYC AML, actually crypto and blockchain could be the tools that help you to do this. So I think we need to help with education at policymaking level for policymakers to understand how that can happen. And GBBC, the organization I represent, would be very happy to help in that regard. I'm a risk manager by training, so I will always talk about risks. There are many risks that are possible that would leapfrog blockchain. And when we think about this, we need to think about there are many blockchains now. They need to be able to talk to each other. We need interoperability. And we need to really be able to think about not having jurisdictional arbitrage like we do, which means fragmentation of laws and rules that are just confusing to people. And here's the difference. Entrepreneurs today will move. If they find a jurisdiction that's more friendly for them, they will move. It is not difficult. So when we think about that, if you want to keep the talent here, and this is the discussions I've had in Turkey, in Colombia, in many countries, it really is around how do you keep your homegrown talent, and also how do you also bring opportunities to the young. And with that, I leave you with one final thought, which is new trading models are going to be very difficult for regulators. Decentralized exchanges have only just begun, and they don't exist in a single place. Today, you have the Korean Stock Exchange, or NASDAQ, or New York Stock Exchange. They have physical places where they have a jurisdiction. What happens in a world where trading occurs and it actually doesn't exist in a place? It's going to be challenging. It's early days, but new models are developing. Just something to think about. And with that, I thank you very much.